I'm convinced gold is going to new all-time highs, nominally at least, eventually in real terms. But in the more near investment future, I think at least nominal all-time highs. And therefore, a buying opportunity is a buying opportunity. And I'd love to take advantage of one. I don't see a scenario where gold takes off and silver does nothing. But could the gold-silver ratio widen enormously? You betcha. Because those traders on the LME and the COMEX, they're seeing silver as an industrial metal. And if gold takes off because of recessionary fears and industrial metals tank, I could absolutely see the gold-silver ratio widening, to new record highs.
Gold's performance so far is encouraging, up around 9% during the last 12 months. In comparison, the Bloomberg Commodity Spot Index, BCOM, is down around 24% during the same period. And with the Fed now facing the consequences of its most aggressive tightening in decades, gold's outlook remains bullish, according to the report. Kitco News mentioned in its May market outlook. Lobo Tiggre, the founder of IndependentSpeculator.com, believes in the significant growth potential of gold and foresees an appealing buying opportunity. He also suggests that the gold-silver ratio may reach new highs if gold surges during the recession while industrial metals decline. The last 5 recessions are very consistent with intuitive expectations. Gold consistently outperforms silver in those recessions as physical silver demand for industrial applications tends to decline. This seems true whether gold prices rise or fall. Regarding the Federal Reserve monetary policy, Tiggre highlights its potential influence on gold investments. In the immediate knee-jerk reaction, gold prices erased some of its session gains as U.S. Treasury yields and the U.S. dollar drifted upwards. Gold has struggled to attract investor attention as the Federal Reserve has aggressively raised interest rates to 5.25%. Tiggre mentions the limited impact of the BRICS recent conference on gold and dollar investments. One way the BRICS hopes to achieve its goals is to undermine the foundation of U.S. power, the dollar's global reserve currency status. The dollar climbed over a 6-month peak, while benchmark 10-year treasuries held at a 16-year high, weighing on greenback-priced bullion that bears no interest. However, gold has still remained resilient above the key psychological $1,900 level. Now, we are presenting you the clips of Lobo Tiggre's insights from his recent interview with Liberty and Finance. Before we continue to delve into this discussion, please subscribe to our channel and activate the bell icon for timely updates.
You could see all those headlines that drove my fellow gold bugs nuts about the coming BRICS conference. There was zero impact on the gold-dollar exchange ratio, which I like to call it instead of the price of gold, because gold is money, right? So just like you have a euro-dollar exchange ratio, I see a gold-dollar exchange ratio. No impact whatsoever. Even when Russia said that, that the BRICS currency was on the agenda and there was going to be gold-backed BRICS currency, of course, Russia's throwing intellectual firebombs into the conversation. They have an incentive to do that. But even that headline had no impact on the gold-dollar exchange ratio at all. So, whatever we might say ideologically, what we'd like to believe or hope to believe, or as gold bugs want to believe, just look at the data. The data is this story has zero impact on the metals that underlie most of my speculations. One way or the other, I think, it gets into a long debate about how much higher for longer. But for now, the takeaway, whatever the Fed does or doesn't do, the takeaway for, gold and silver investors is this makes a big difference in terms of where the gold-dollar exchange ratio goes. Because if the mainstream is right and it looks like Team Soft Landing is right and it's higher for longer until sometime next year when the Fed eases up just because they won, there's nothing bullish for gold in that. Gold doesn't pay interest. Right? If the Fed's won, then there's no fear. There's no need for a safe haven. If I'm right, then, oh my gosh, there's, something bad is happening. There's need for a safe haven. And the Fed pivots. Easy money is bad for the dollar. It's good for alternatives, including gold and probably silver. Silver has been acting much more like an industrial metal this year. And you can see it on the intraday charts and the daily charts. Like overall, it's following gold, but the gold-silver ratio, as we all lamentably know, is not going where we want it to go. And that's because if you watch it on a shorter-term basis, the silver chart looks much more like the copper chart than the gold chart. And you and I and our audience may understand that silver, is money, has been for thousands of years. It is the word for money in so many languages. Yes, we get all that. But those guys on the COMEX who trade futures, whose prices and decisions we mistakenly refer to as the price of silver, they don't care about any of that. It's just another metal, and it goes in solar panels, and it's an industrial metal. It's no different from pork bellies or copper. And you'll see it on the charts, wiggling just like copper. And that says that we need to be cautious about assuming that silver will track gold very closely. Now, I don't think gold takes off and silver does nothing. That's not a credible scenario to me yet. There's enough of us and others out there who get that silver is money, that it can't just be left completely behind. But we are a minority. We need to understand we're not the mainstream. I'm sorry, my fellow silver bucks. We're not the mainstream, and you know it. So those other guys setting the prices, or gals, right? We saw this in 2020 when gold and silver both fell off the cliff, and then gold picks itself right back up again, and silver just went sideways for a year almost. We could see something like that again. I don't want that to happen. I'm not I'm not anti-silver. Please don't hate me for just saying that. But it's my job to tell you, what the odds look like. And I would not be doing you a service to just say, rah, 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 buy, 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 if silver might underperform gold in the months immediately ahead.
Tiggre suggests prudent consideration of market conditions, especially while speculating on silver's performance during economic downturns. If the Federal Reserve sounds extraordinarily hawkish, that could be negative for silver. And of course, if the Federal Reserve sounds like they may be thinking about switching their tone, then it's possible that silver can take off from here. Meanwhile, Tiggre believes gold could continue facing challenges unless a recession emerges, potentially benefiting the precious metal. Moving forward, Tiggre disagrees with the mainstream view, suggesting that the Fed's actions might lead to significant issues in the financial system. Wall Street will closely watch whether Fed policymakers still expect to make another interest rate increase before the end of the year, or whether they are edging closer to the next phase in their fight against rapid inflation. Central bankers have already raised interest rates to a range of 5.25 to 5.5%, the highest level in 22 years. Let's get back to the interview.
If you're stacking silver, that's different. That's savings. A completely different conversation. But if you're buying silver stocks, or even going further out on a limb with margin or options, because you think silver is about to take off in this recession, and you're wrong, or even you're right about the recession, but then silver responds like an industrial metal, you're going to take a world of hurt in having gone out on a limb in that way. So this is really my point. I'm not anti-silver. I love silver. I'm wearing silver right now, right? But the data is telling us that the use case for silver is changing. And, all the platinum bulls who said, no, that can't happen to platinum. Well, talk to them and feel their pain for the last more than a decade. You just can't ignore this stuff if your object is to make money. And I think gold, it's been several months since you and I spoke, and I'm not sure that I said this the last time we did, but in the last few months over the summer, I turned near-term bearish on gold because it was obvious that the reverse base effects were helping team soft landing, and the two factors I just mentioned, higher for longer and less fear, less safe haven demand, were going to be bearish for gold until I'm right about the recession. That's still the case now. So, if the Fed starts easing up or talking more dovish than I expect, that would be great for gold. But if not, I think we're still, unfortunately, looking at headwinds in the gold space for the nearest term. And I mean, just the next few weeks even. Which, I know long-suffering gold bugs, they don't want another buying opportunity. They're done with buying opportunities. They want payday. I get it. I know. But, we can't tell Mr. Market what to do. And for what it's worth, though, I think if we do get another buying opportunity in weeks ahead, we already have a lot of cheap, I think, quality gold stocks that are still on sale quite cheap. But if they get cheaper in the weeks ahead, that would not be a bearish signal to me. I wouldn't be frightened. I would absolutely see that as a gift. I remain convinced about the thesis you and I have described. So I'm convinced gold is going to new all-time highs. I think Powell will do his best to whip out his jawbone and beat the markets into submission afterwards so they don't get too excited. The last thing they want is the markets to undo their hard work, putting people out of work by easing financial conditions. So I think, hawkish pause. Well, your readers will know whether or not my cracked crystal ball is right or not on that one. But it almost doesn't matter. I mean, we've gone from 0 to 5.5 interest rates in record time after years and years, decade plus of zero, effectively no interest, free money. And I may be wrong. This really is unprecedented. So I can't say every case of this in history shows that something major is yet to break. But everything that I have learned from history and economics tells me that you can't make such an abrupt change from extremely accommodative policy to extraordinarily rapid tightening without more things breaking. And the difficulties that the regional banks had last March, I think that was just an overture. So there's two things to keep in mind here. The mainstream is looking for the Fed to pivot just because they beat inflation, or it's beaten enough, it's close enough to 2% that the Fed can say, okay, well, we don't need rates to be this high. It can start, and the market odds are very strong that the Fed will pivot by mid next year. They're going to start loosening. But these people giving you these odds, the bond vigilantes and so on, they're not seeing what I'm seeing. They're not saying, there's going to be, something's going to break, things are going to get bad. They're seeing the soft landing or not terribly difficult landing, right? Things will slow down a bit, but under control. There'll be a bit more unemployment, but nothing terrible. And inflation will be down. So hoorah, we don't need to have these high interest rates anymore. I think that's wrong. We'll find out. I don't know the future. We'll find out, but I think that the Fed is going to break something. Now, if I'm wrong and nothing else major blows up, then probably the mainstream is right. That's probably where we go. The base effects are not helping the Fed anymore, but they're still there.
Gold has outperformed other commodities in recent economic conditions, while the silver market is uncertain and consolidated, with the upcoming FOMC meeting as a critical factor. Gold takes on a greater importance in non-Western countries. Over the last 20 years, the world's top two gold consumers, China and India, imported 35,000 tons. China is also the largest gold producer. How will the Fed measures shape the future of precious metals like gold and silver? Share your thoughts in the comment section below. If you find this video informative, don't forget to show your support towards our channel by giving this video a thumbs up and subscribe to our channel, and turn on notifications to stay informed about our latest videos covering more exciting topics. Thank you for watching.